So one of the questions that we get almost every single day is, what do I do if I have bad credit and I need to finance a vehicle? What if you can't find a vehicle that's $2,000, $3,000, $4,000 or $5,000 that's adequate for what you actually need? What do you do in that situation? This is something that comes up absolutely every day and something that I definitely want to talk about with you. So this is your episode of Dealership View, and I'm your host, Shayne Couillard. You're in a situation, you have bad credit, and you need to buy a vehicle. What are the options that you have in terms of getting financed on either a new or a pre-owned car? Well, the first thing you have to ask yourself is, how bad is the situation really? Which could mean, how bad is my beacon score? How late have I been on payments? How bad is the entire situation? Because in all reality, there's a lot of consumers out there who think that their score is on the poor side, however can qualify for prime rate financing. So the first step in terms of determining whether or not you can finance either a new or a used vehicle is to come into the dealership, find the perfect vehicle, and try to get finance for prime rate financing. That's option number one. Option number two comes into play when you're looking at a new vehicle and you're trying to get financed. One of the things that you can do to try to help yourself get financing on that new vehicle is to look at something cheaper. So if you're looking at a $60,000 F-150, one of the things that you could do is take a look at maybe a $20,000 Focus. That would be option two. Option number three, if you're looking at a new vehicle, would be to look at a lease option. In many cases, it's easier to get approved on a lease because the term is shorter, being a 24, 36, or 48-month lease, as opposed to looking at a finance term that's 72 or 84 months in order to achieve the same payment that's agreeable with you. That would be option number three. When all else fails on a new vehicle, option number four would be to look at a pre-owned vehicle. Pre-owned vehicles are typically less money and the financing goes through the bank, in some cases allowing an easier approval. When all else fails, the next option, which will be option number five, that you have to help you get approved on either a new or a pre-owned vehicle, is to find yourself a cosigner. If you have a strong cosigner, and by strong what I mean is somebody with a good beacon score, a good income, and the capability to pay the loan should you run into a situation that you default, this will sometimes help you get approved. It's a secondary person that takes on the loan in a 50-50 portion of you. You make the payments, you carry it, it's your vehicle, but in the event that you fail, this person will be your backup. This allows the banks to look at the situation and determine that, hey, we have somebody good to fall back on should person A default on the loan. So option number five is to get yourself a cosigner. In the event that the other five options aren't feasible for you as a consumer, the sixth option would be to take subprime financing. What that means for you as a consumer, let's say on a pre-owned vehicle, is instead of having a finance rate of $599 to $699, you would take a higher interest rate given that the bank would approve at that. There are specialty banks that do specialize in subprime financing, and the rates can range. They could be 10%, they could be 15%, they could be 20%, depending on the situation and how the entire credit score looks and how the entire deal looks to that bank. In the event that you're in need of a vehicle and in need of rebuilding your credit, subprime financing may be the way to go. If you can get approved for subprime financing over 4 years or 5 years, you can keep that vehicle to 3, 4 of the years, and you can always trade out of it and get into something else. The entire goal of subprime financing is to get you into a vehicle to solve that need, and then to start rebuilding your credit so that in a few years, you can get approved for prime financing. So option 6 is to take subprime financing. Option number 7 would be to look at an in-house lease with a dealership. The way an in-house lease works, they take a vehicle and instead of going through a finance company, they internally lease you that vehicle. Typically these are over short terms, 24 or 36 months, with a set amount of cash down and at an interest rate that the dealership has determined. It's a great option when everything else fails to get you into a vehicle, and given that the dealership reports to the credit bureaus, this will also help build your credit. So option number 7 is to look at an in-house lease. So, bonus option, number 8, I guess, because I forgot. One of the biggest things you can do to assist in getting approved on a vehicle would be to take a look at putting some cash down. Now, I know this isn't always feasible, but in many cases, if you can come up with a little bit of money, whether it's $1,000, whether it's $5,000, to put down on your vehicle purchase, that gives you a little bit more foothold in the financing deal and allows the bank or the finance company to have a little bit better feeling when they go to look at the deal when you have a situation where you end up with bad credit. So, bonus option number 8 would be to put cash down. Now, that's it. That's all I have. That being said, this is your episode of Dealership View, and I'm your host, Shayne Couillard.